thank you all for taking time out of your busy day for this webinar. We hope you find it'll be well worth your time. I've been with CPG a little over 10 years, and I consider myself to be a resource to you so that at any point during your career and even into retirement, I could help you understand how the pension plan works, see if there are opportunities to maximize or increase your pension, and answer your general financial questions. So thank you again for participating with us now, and I'd like to introduce to you my colleague, Dolly Rios.
Thank you, Larry. Good morning, everyone, or good afternoon for me here in New York. My name is Dolly Rios. I'm a CPA licensed in the state of New York. I have over 25 years of experience in tax preparation, and I'm also a resource to you. As many of you know, I am I have been the person who answers the tax hotline. Pretty soon we'll have some help, and that is good news. So that's basically all about me. So let's have our conversation about clergy taxes. Okay, so as many of you know, clergy have dual tax status. What that means is that they're treated as employees for federal income tax purposes, reporting purposes, and they're treated as self-employed for Social Security purposes. So keep that in mind, as your church should not be withholding FICA tax. We also know that clergy should be receiving a W-2 and not a Form 1099. Clergy are exempt from withholding, and that entails, or that means that they need to make quarterly estimated tax payments to cover both their income tax or their federal income tax, local and state tax, and self-employment taxes. In addition to that, they should also, if they want to avoid having to make the quarterly estimated payments, they can enter into a voluntary agreement with their employer to have tax withheld. They should make sure that they include enough to cover both their federal income tax liability and their self-employment tax. Next slide, please. Oh, we have good news. The 2025 Clergy Tax Return Preparation Guide is already available. Some of you have called the tax hotline to find out when it would be available. So it is available now. So that is great news. Okay, so what would be considered income while you're actively working? For federal income tax purposes, your cash compensation is considered is part of your taxable income for federal purposes, and any additional taxable items, mainly your Social Security reimbursement, that's also part of your federal taxable income, and any other self-employment income such as consulting, any supply work that you do, or counseling. Income that is subject to SECA or self-employment tax is all of your federal taxable income, meaning all of what we have on the left side of the slide, plus your housing. So remember that for SECA purposes, SECA tax, you pay tax on both your federal taxable income and your housing allowance exclusion. Next slide, please. So what are some federal income tax exclusions? I think Larry can go over this slide with you. Larry?
Thank you.
Back to you.
So we always encourage participants to enroll in our 403(b) plan, which means that you're making contributions pre-tax out of your paycheck, and it goes over to our bookkeeper, Fidelity, where it's invested. So because it comes out pre-tax, you're not paying any federal income tax on it. So that's pretty cool. Also, if you make contributions to a traditional IRA, that you would take a deduction on your tax return. So again, no federal income tax on that. Now, the housing allowance, we're paying self-employment tax, not federal income tax on it. And the IRS requires that you calculate your housing allowance at least annually, but you could do it every 2 or 3 years because things don't change maybe that dramatically. But you need to use the lowest calculation method. The first one would be fair rental value with utilities. And the other one would be actual cost. So when you calculate it both ways, the IRS requires you to use a lower number. And that's typically the number that you'd want to give to your vestry for the vestry resolution. When you work, sorry, when you're staying in a church provide housing, you need to calculate what the fair rental value furnished for what that house would be if you were to put it out on the market and see what you can get for it. So that calculation, typically you could use Zillow, or maybe if there's a member of your congregation who's a realtor, they can get you comps of a similar house. But you need to do that. You just can't pick a number out of thin air, and you cannot use a percentage of your income. I come across that a lot in conversations where a cleric will just say, "Oh, I heard that you can use X percent for the cost of the housing if you live in church-owned housing," and that is incorrect. So you need to do some research on it. So these are examples of what's not taxed on the federal level, but you do have to pay the secret tax on it. So next slide, please. So let's talk briefly about what an accountable reimbursable business plan, expense plan is. With the last tax change a couple of years ago, people who are W-2, employees who are W-2, cannot take deductions on business-related expenses. Just done away with completely. But for clergy, you could set up an accountable reimbursable business expense plan, which basically means that you would provide documentation of your business expenses, and your employer would reimburse you dollar for dollar. And there's no tax consequence for this at all. And it does not cost your employer any extra money because basically in your employment contract, you would stipulate the outlines and the procedures of how to do an accountable reimbursable business expense plan. So again, it does not cost your employer any extra money. It's just another way of carving up your total compensation package to make it the most tax efficient for you. And if you do have business related expenses during the year, and since we require you to be a W-2, you'd be crazy not to do this, quite frankly. So if you have questions about how to set it up, the IRS has a publication that goes into great detail about it, and you could hand it to your bookkeeper or your treasurer. And you could certainly call Dolly on the tax hotline to run through briefly. So basically, business related expenses would be sometimes travel, but there are limitations on that. If you pay for a business related meal, if you use your cell phone for business related expenses, those are the kind of things that could be a valid business expense. So you should review what the IRS says about that. They have a list, and you should review with your employer that they agree to all of them. Because some might not say, well, continuing ed courses, yeah, maybe not. So just have clarity with your employer as to what expenses you can submit to get reimbursed for. Okay. And again, as long as you're getting reimbursed by your employer, there's no tax consequence. IRS does not get involved, and it's completely legit. So let me move on to the next slide. Here's an example of the business expenses: books, journals, newspapers, dues for organizations. If you need to join the Chamber of Commerce, they typically have dues to that. Continuing ed, we talked about that. Meals with a clear business purpose, and the IRS has plenty of rules about that and documentation to explain how it's done. Non-commuting transportation. So what that means is if you leave your home when you go to work, that travel cannot be a business expense because it's home to work. But if you go from one work to another work, that could be eligible for as a business expense. A lot of folks don't have a landline anymore, and they use their cell phone for everything, both personal as well as business. So you need to come up with a percentage of usage for the personal phone that you carve out for business, and that could be reimbursed. Okay. So cost of purchasing and dry cleaning clericals, that doesn't amount to much, but it's still something that is a valid business expense. Business suits for men is not considered business clothing that you can get reimbursed for. It's basically your clerical robes and that sort of thing. Okay. And there's plenty more. Some of them could be more of a gray area. So you should have a conversation with your tax preparer, which are the expenses you want to use. Federally taxable income in retirement, salary if you're working after retirement, and there's a whole lot of rules about working while pensioned with us. if you get payments for your pension that are in excess of your housing allowance, retirement plan distributions, and distributions from our RSVP. Remember, RSVP stands for Retirement Savings Program. It's our marketing name for a 403B. And that's the money we talked about was federally excluded because it comes out pre-tax. But now when you take a distribution, it may be taxable, or you may be able to apply housing allowance towards those distributions, which in that case would make it federally income tax free, not state, but just federal. So these are potentially sources of income that would be federally taxed in retirement. Next slide, please. Additionally, when you have a traditional IRA, it's taxable because typically when you contribute to a traditional IRA, you're getting a tax deduction on your tax return on the federal level. So you need to pay the tax when it comes out. Now, Roth IRAs are non-taxable after age 59 and a half, and if been sitting in there for at least 5 years. Social Security may be taxable. So the way that works is if you're married and you're filing joint, once your income hits the mid 30,000 range, your Social Security benefits will start being taxed up to 85% of it. So that number, that $30,000 range, has never been adjusted since they came up with that number because it's pretty like unreasonable, but so be it. And other self-employment income, if you're retired and you're doing writing books, giving speeches, that kind of thing, that would be fairly income tax also on a Schedule C form. So a lot of this, as long as you're working with a tax preparer who understands clergy taxes, this is straightforward, shouldn't be too confusing for your tax preparer at all. And again, Dolly is on our toll-free tax hotline, and she could guide you with this. But remember now, the tax hotline is for clergy-related tax issues, not just general tax. All right. So federal income tax exclusions in retirement. So basically what we're saying is 100% of your pension is eligible to be designated as housing allowance on the federal level. It's going to be up to you to calculate it and apply it when you fill out your 1040. And it would be line 5A and 5B currently on the 1040, where you show how much you're receiving as a pension and how much of it is taxed. If you're working and still in the church, income earned during retirement, you need to obtain a separate housing allowance resolution from your employer. And remember, you only have one housing allowance number calculated the way we talked about before. So you would need to split it towards what you're receiving as a pension plus what you're getting as income. You can't use it twice. Okay, next slide, please. Post-retirement health subsidy. That's also exclusion in retirement. We do offer a Medicare Advantage plan for clerics who retire with at least 10 years accredited service, and you have to be Medicare eligible. And up to $50,000 of life insurance that we offer to retirees would also be excluded from federal income tax. Okay. CPG resources. We have a complimentary individual financial discussions, one-on-one, typically about an hour. Basically, what you do, if you go to the homepage of our website, down at the bottom, it says schedule a financial conversation. You'll have access to my calendar where you can see when I'm busy or when I'm available. And we can set up a time to chat. We could talk about the pension, tax-related issues, financial-related questions, all that kind of stuff. I'm there to educate. I cannot tell you what to do, but it's a fabulous resource. And it doesn't cost you anything. You could check in with a conversation every couple of years. Certainly, if there's a lifestyle change, you're changing jobs, something happens, you're married, divorced, whatever, those could be great opportunities to have a financial conversation. And we have this toll-free tax hotline that's available all year round. And we just recently have someone else joining us, so it won't just be Dolly, but again, you can call at any time during the year and ask your clergy tax-related questions. We also have additional resources I believe we list on the next page. We have the clergy tax guide that Dolly had alluded to. We also have e-learning courses. If you go to our e-library, There's a lot of webinars there explaining how to calculate a housing allowance and a lot of other timely topics that you have free access to at any time on our website. There's no firewall password kind of a thing to get to. Okay, so we do offer the Hammer Guide. We have a supplement tax preparation document that goes into a little more detail in certain areas that Hammer doesn't do it. And we also have federal reporting requirements that's more for administrators to understand how to do the taxes for their clergy employees. So we have a ton of resources. Please take advantage of it as much as you can and need to and want to. So I see that Lori's posting on the chat the
Mhm.
links to these various documents, including the e-learning. So please take advantage of it. And I say this with all well-meaning. It's so easy to contact Dahlia or myself or our colleagues to get the right answers about how the pension plan works and all that stuff, rather than relying on your colleagues who may not be up to speed on all the latest stuff. So please take advantage of our resources and our availability to make sure you get timely and accurate information with all regards to your career with us. So let's move on to the next slide. This is our famous or infamous disclaimer that basically says we're here to educate, not to advise. We'd strongly recommend you hire and work with a tax preparer who understands clergy taxes. We're not, we don't refer you to anyone, but resources for that could be ask your colleagues who they use and if they're satisfied with the work they do, see if they could do a referral. Or if that doesn't work, we also suggest that you reach out to your diocesan financial officer. I'm sure they have a list of tax preparers who also understand clergy taxes. So again, our disclaimer here is we're here just to educate, not to advise or anything. And now we can get a fun
Q&A.
part. So the questions that you entered when you enrolled, we'd like to review first, and then we'll get to the questions that have been coming in while we've been chatting. So the first question is, how do I handle clergy housing allowance for my new position, particularly since I now have a rectory? So when you sign your contract with your new employer, it should outline your total compensation package, any dividing up of that money for like an accountable business reimbursement plan, and also how much you're declaring as a housing allowance. So if you live in a rectory, you need to go out and get a fair rental value plus utilities from Zillow, other websites, or a realtor, and use that number for how to calculate your housing allowance, and then you provide that to your employer, and they put that in the vestry minutes. So next question is what qualifies as a housing allowance expense and how do I determine it? So you'd be surprised that the IRS has never issued a definitive list of what goes into a housing allowance. But there are a lot of generally accepted agreements about what is. So if you rent, it'd be the rent. If you pay the utilities, it'd be the utilities. If you have to pay for a parking garage spot, that counts. Furnishings, if you have insurance on the rental place, that all counts. If you own a place, then it would be mortgage and interest, real estate taxes, all your utilities, furnishings, capital improvements. And when I say capital improvements, I'm not talking about painting the dining room green. I'm talking about a new roof or a boiler or adding an addition because a capital improvement is defined as improving the property. So those are the generally accepted ones. Landscaping costs would be. But then after that, that's where a conversation with Dolly would make sense. And you'll have to decide for yourself if you want to go that deeper dive. But again, if you compare your actual cost in calculating your house versus the fair rental value, furnished and utilities, you need to use the lower number of those two when you do your taxes. Okay, so that explains question two. How should I note the housing allowance on my tax forms? On the 1040, it's line 5A and 5B. And you keep paper trail, keep a little folder with your tax returns of all the bills and the invoices if you're using the actual cost, so that if you should happen to get audited, You can provide documentation of how you came up with the utility numbers and that sort of thing. Question number 4, how to determine taxable value of church-provided housing. So again, Zillow, Realtor, fair rental value of an equivalent home. And you do the best you can. If your home is a turn of the century Tudor mansion with 10 bedrooms, likely you're not going to find too many homes in the neighborhood that are similar. So you have to do the best you can and just document how you came up with that number. And if it's used only part-time, then you have to calculate prorate it based on the time you are in there. And that's where a phone call to Dolly would be helpful, or having a financial tax preparer who understands clergy taxes. So that answers the 4 questions for me. And now Dolly is going to take up with the next.
Okay, thank you. I'm sorry, I have to unmute myself. Okay, so now we have some questions about self-employment. What income must clergy pay self-employment tax on? Clergy pay self-employment tax on their entire compensation. That means their cash compensation and housing. Number 2, would love to understand more about SICA and how best to account for that when withholding taxes. So what I usually recommend is that if you want to understand how much SICA tax to take from your compensation, I recommend that you go to the IRS tax withholding estimator and put in your entire compensation there. But for the most part, SICA tax is equivalent to 15.3 of your total compensation. Remember, your total compensation includes housing. So for example, if your cash compensation is 70,000 and your housing is 30,000, your SICA tax would be 15,300. So that's basically how you would calculate your self-employment tax. And you can ask your employer to take additional tax that will show in box 2 of your W-2 if you don't want to be making quarterly estimated payments. Throughout the webinar, we mentioned that there is clergy can enter into what is called a voluntary agreement with their employer to have additional taxes taken out. And they enter into that agreement by submitting form W-4 to their employer. Okay, so now we move on to other questions. Larry, you want to take that, or do I take
Align
some of that?
together. I'll start and you could chime in when, right? So we
Sure.
get 2 questions about, do I need to pay Social Security taxes as a clergy member? Yes. People do opt out of it, but we strongly encourage, the Episcopal Church strongly encourages you do not opt out of Social Security. The second half of the question is, how does it work? That's beyond the scope of this webinar. And look, if you're working with a qualified tax preparer, let them worry about that, quite frankly. Okay. Number 2, Dolly, would you agree with that?
Yes, well, what is the dual status for clergy? We mentioned that throughout the webinar. They are treated as employees for federal income tax purpose, and they're treated as self-employed for Social Security and Medicare purposes. That's what the dual status means. And the
Right.
way it's affecting your taxes is what we said on question number 1, which is what income is subject to self-employment. It means that your entire compensation, cash, salary, plus housing, are subject to SICA tax.
Yep. Third question, on a W-2 form, can you go over a list of what is included in each box that is required for clergy? So that goes beyond the scope of this conversation, but briefly, box number 1 is going to be your cash compensation. Box number 14 should indicate what you're declaring for housing allowance. Boxes 12 should indicate what's coming out on a pre-tax deduction for enrolling in our 403B, health insurance, and that kind of stuff. But going through each box, I'm sorry, you should be working with your tax preparer, and they would understand all that stuff.
Right. And one thing that I would like to add on that, yes, as we're not going over each box, but just make sure that if you're obviously your clergy, that boxes through 3 through 6 have nothing on them. That's
Yeah.
basically what I always say.
Right. So, question number 5, what documentation is needed for reimbursement plans and expense claims? So basically, you need to have a conversation with your employer to agree on what business expenses they agree to. So we went through a list in the webinar, books and journals and dues, membership dues, continuing ed, business related meals. So just make sure that your employer is on board because you don't want to spend something thinking you'll get reimbursed, and then the employer says, not so fast. So basically, you need to have documentation, and the IRS does have a publication about how to go into this, where they want to know the purpose of the meeting, the date of the meeting, obviously the cost, and they want a list of the people who are there. So it gets a little, detailed, but it's certainly worth it to get reimbursed dollar for dollar between your employer. And if you have further questions, that could be a phone call with Dolly, but you could just Google reimbursable business expense publication for the IRS, and it should be there. And again, when you are working with a tax preparer, they should know all this stuff, and they will guide you through what documentation and paperwork you need to ensure for that.
And Larry, I would like to add that if your
Sure.
tax preparer feels that perhaps they haven't prepared enough clergy taxes, they can also call the tax hotline if they have questions. Your CPA can call me and we can go over if they have doubts about what applies or what doesn't apply.
And that's a great benefit, so please take advantage of that. So, what are the tax implications of insurance payouts following a death, and how are they taxed? That's beyond the scope of this webinar, but in general, if someone in your family dies and they leave you a death benefit, typically that's not taxed. But then when you invest it, then it gets taxed on any earnings, growth, and that kind of stuff. Okay, so that's basically as far as we can go with this here. Number 7, how can I maximize savings and minimize tax liability with the RSVP account? So remember, the RSVP account is our version of 403B plan. So the money goes in pre-tax. So let me just make up Friday afternoon numbers. You're making 80,000 bucks and you're contributing $10,000 pre-tax to the RSVP plan. That just made your taxable income $70,000 because the $10,000 comes off. So you just lowered your current tax hit by contributing to the 403B. So that's a way you can maximize savings because all $10,000 are going to work for you right away because there's no tax coming out. It's pre-tax. Okay. So that lowers your current tax requirements as well as saving for retirement. Tips for improving the RSVP account: growth and understanding qualifying deductions that lower tax liability. So the money that goes in pre-tax and it goes over to Fidelity, and they invest it in mutual funds that have different investment strategies. If you do not indicate to Fidelity what mutual funds you want to invest in, they will invest in what they call life cycle funds that are based on your age. So let's say you're 35 and you want them to invest in a life cycle fund. They're going to see you have another 30, 35 years for retirement. So they will put it into a life cycle fund that's pretty aggressive. But the nice thing about the life cycle fund also is that every year or two, a couple of years, they will readjust it as you get older and older and close to retirement. They will readjust it to become more and more conservative so that by the time you do retire at 65, it'll be very conservative. So that would be a fine choice. And again, how much you can contribute is an IRS requirement. It's not a CPG requirement. And that how much you can contribute does go up over time. I don't have the numbers memorized, but I think it's roughly
23,000 for,
so you
I
did
mean, you mean in
memorize it.
24, but I mean, 25 has been updated. I didn't memorize those either.
Okay. And if you're over 50, then they do allow a catch up that's almost up to 30 or 31,000 at this point. So that's huge and that's fabulous. The money goes in pre-tax, it grows tax deferred. And again, you may be eligible to declare the distributions as housing allowance on the federal level, which would make it tax-free on the way out. So that's huge. The one thing to keep in mind is you are taking on the investment risk just like everybody else. And so if you have that plus a pension with us where there is no investment risk for you, then that would be a wise strategy to consider and discuss and research so that in retirement you're doing well.